China's housing market showed signs of cooling down in March. This was the greatest monthly fall in mortgage rate figures since 2019. In March, online marketplace 58.com and housing information platform Anjuk.com released a report showing that housing searches in China dropped 11.8% from the previous month. In addition to a cut in the interest rate, the financial system is supporting rigid demand for better living conditions, and these kinds of encouragement of rigid and rational demand are likely to spread to other cities as well, whether they are first and second-tier cities, or even those in the lower rungs. First-tier cities saw an index decline of 9.8%, second-tier cities saw an index decline of 11.8%, and third and fourth-tier cities saw a decline of 13.4%. Last month, the average price of new housing in 65 major cities was 17,547 yuan, or $2,756.70 per square meter, down by 0.08% from the previous month. The price of second-hand houses dipped 0.22% from last month to 16,921 yuan per square meter. In some regions affected by the COVID-19 pandemic, some Chinese banks have rolled out policies allowing them to postpone mortgage repayment. The Postal Savings Bank of China, Bank of Communications, and the Industrial and Commercial Bank of China have affirmative policies for delaying repayment. China Construction Bank and China Agricultural Bank of China, two of China's top 5 banks, made disclosures that let borrowers inquire with local housing mortgage managers about specific postponement situations. In a closed-loop management area, China Construction Bank employees said borrowers can obtain an extension of mortgage repayment for reasons related to COVID-19, adding that the longest extension in the province of Jilin is 28 days. Since the beginning of the year, almost 60 Chinese cities have made financial adjustments to their property markets, including raising the amount of personal housing loans and cutting down payments. The downturn has already led to the relaxation of home purchase restrictions or lowered mortgage rates in over 70 cities, including some provincial capitals. Regulation of the real estate market requires property-related financial policies to be taken seriously. Housing should be used as a source of permanent living and not for speculation, so speculation can gradually be reversed. Most Chinese cities allow first-time homebuyers to apply for mortgages for existing residential properties at a rate below 5%, and the lowest rate could reach 4.6%, which is the same as the over 5-year loan prime rate. For first-time homebuyers in cities such as Shanghai, Shenzhen, and Harbin in Heilongjiang Province, and Suzhou in Jiangsu Province, interest rates on pre-owned homes can be as low as 5%. The easier credit climate contributed to a 17% increase in average daily home sales in the 50 largest cities between March 1 and March 17, and supply has improved while prices have remained stable. Further easing of property policies, including lowering of mortgage interest rates, lowering down payment requirements, accelerating construction of public rental housing, and appropriate support for property developers should be put into play, enabling the second quarter to see a rebound in economic activity. Furthermore, it is the responsibility of the government to continue optimizing the financial policies to better support the rational demand from citizens for housing, in order to promote a steady and healthy development of the property market, and to maintain financial and economic stability. Let us know your thoughts in the comment section below. Also, please remember to like and subscribe to our channel. Thanks!